I think that in any new market, particularly in Southeast Asia, I would say this for almost any sort of international expansion broadly, you will almost certainly need a refined product market fit. Your positioning, your product almost certainly need to change, sometimes in very subtle ways, sometimes in very substantial ways. Given this context, my personal view, you're more likely to be successful if you have someone who's already from the organization going to it.
Today we are joined by Thomas, the country manager for Aspire. Thank you again for hosting us in this beautiful space today, and we're excited for the conversation. Maybe to kick things off, if you could just share a little bit of background context on yourself.
Sure, absolutely. So my current role at Aspire is to lead the Singapore business. It's our oldest and largest market. Prior to this role, I was at an ed tech company, very different, pre-Series A. And before that, I was leading global business development for a venture firm called 500 Startups, now known as 500 Global. I have founded my own startup before, did not do a very good job of it, which I don't want to get into today. And before that, I was a management consulting, which is something I was a management consultant, which I'm still kind of recovering from.
Me as well, also recovering.
Wait, how bad is it? How bad is it?
You know, do you want to talk about the psychological trauma?
Yeah, go.
Or
I'll give you 2 minutes. Talk a little bit.
You know, it's in all seriousness, it was a very formative experience. I learned quite a bit. A lot of the way I think about business and about management today, I can attribute to management consulting. I wouldn't want to replicate the lifestyle I led at the time.
Okay, fair.
But for today, we're going to be talking all about expansion throughout Southeast Asia. And so maybe to kick things off, I'd love to hear how you've thought about getting that right with Aspire in the region.
I mean, where to start?
Still trying to get it right.
We're still trying to get it right. So Aspire itself has gone through multiple phases of expansion. We were originally founded as a very different business, focused initially on credit. And we actually were multi-country from the very beginning, in Singapore, but also markets where we're not actually that active today, including Thailand, Malaysia, Vietnam, although we're still there as well. And we've definitely kind of undergone an evolution over the years. So we, especially during the pandemic, ended up pulling back to Singapore as a core market and using that as a hub to serve regionally. And now we're again venturing out into new markets. Indonesia has been a major expansion opportunity for us. We're doing quite well there. And we're now looking at other markets like Hong Kong. And of course, if you look at our careers page, you'll see that we're looking to going to even more markets in Southeast Asia and beyond.
That's a very subtle plug. Look at our careers page, you know? Where are we going?
We're growing, we're hiring, you know, so if anyone out there is interested, you know, let us know. Get in touch.
Awesome. Maybe you can give us a little bit of thought around like Indonesia, what have you tried? Because I think getting you on the show is really about executing it and iterating the plan. What do you try? What works? What didn't work? You know, you and your team.
Yeah, absolutely. So the pattern that we have typically followed at Aspire is to use established market teams to test new markets. And once that initial demand has been validated and we've been able to see that there is a real market there, then we go further into the market with additional product changes, additional product upgrades, as well as on-the-ground teams.
Okay.
So in the case of Indonesia, when we were first starting to look at expanding more into the country, we actually started with our Singapore team. So we had one of our account executives split his time between Singapore and Indonesia as we were trying to go in there. He was able to win deals on both sides, and we saw that there was potential in the Indonesia market. And with that, we made the decision to go further in there, making product investments with more localization, which is particularly important in fintech, and to leverage some of the acquisitions we had made previously. We now actually have a parallel organization in Indonesia that is comparable in size actually to Singapore, with its own general manager, with its own commercial teams, and now increasingly with product exposure as well.
Yeah, nice. So you're talking about putting an established team. Just kind of give me an idea. That means you're trying to get someone that already succeeded in your HQ to enter into the new market, or like are you trying to get an established team locally to get going with this?
So the way I would personally describe it, and this may or may not represent the views of Aspire at large, which I think are relatively varied. The way I would think about it is you're testing for that market, often using the existing offerings that you have, with a fairly well-informed hypothesis that there's going to be demand there. However, even if you do all the desk research in the world, even if you have a really strong thesis, even if your investors are pushing you to do it, it doesn't mean that the demand will necessarily exist there organically. So you still need to go validate it. Our experience and my personal experience at Aspire, as well as other companies, has shown that if you get someone who has no familiarity with your company, with no familiarity with your products, to try to go in and break into a new market, it's not going to go very well because the learning curve is just so high. Not only do they need to learn the new market, they also need to learn your company and its products as well. And then inevitably, when they run into issues with product market fit, it's going to be very difficult for them to make the case internally for the change because they themselves have not built the connections, the network, the credibility in order to force that change through or influence for change, right? And so what has worked a bit better for us is when either intentionally or by happenstance, we've had existing teams, usually sitting in more mature markets like Singapore, basically incidentally or intentionally or unintentionally find that opportunity in a new market, sort of validate it, and then as a company, we then take a step back and say, are we taking a bet on this new market?
Nice. Okay. So to be clear, you would recommend people to just kind of put your established guys out there into a new market rather than hire locally right away, right?
So this is my personal view. I think that in any new market, particularly in Southeast Asia, I would say this for almost any sort of international expansion broadly, you will almost certainly need a refined product market fit. Your positioning, your product almost certainly need to change, sometimes in very subtle ways, sometimes in very substantial ways. Given this context, my personal view, again, and this is my personal view, not the Aspire view necessarily, just a caveat for everyone that's out there, you're more likely to be successful if you have someone who's already from the organization going to it.
Yeah. I get it, because all the political elements of it, right? You come back, you want to sell to the people, so that is a curve.
Yeah, and this is not necessarily to denigrate anyone who's coming new to an organization, specifically open up a new market, right? I, to some extent, have actually done that myself. But there's always going to be the question, if it's not going well, is it the market, is it the product, or is it this person?
Yeah.
And that's a lot to put on someone who's new and may or may not have the adequate resourcing enablement to get something done.
Yeah. Okay. So you mentioned part of your background, you've been in startups, though, and obviously within the context of fast-growing companies, sometimes you just don't necessarily have those individuals within your organization. So, if we're thinking about an organization that might want to do that market expansion, might feel like it's the right time for that market, but they look around at the bench that they have, and it doesn't necessarily reflect what they need. What advice do you give for, the leaders trying to make that type of leap?
Man, I mean, you guys are the recruiters. You sell it. I mean, if the talent's not there, what do you do exactly, right? I think it's a really challenging question, frankly. I don't think there is an easy way to solve this. I have seen some situations where leveraging executive attention, whether it's a founder or someone in the C-suite or someone relatively senior to go do something with the appropriate bandwidth management and all of that, can lead to the right results. Of course, they usually have a lot going on, and they're not going to be a very good individual contributor when they're doing this type of thing. And so sometimes maybe you do actually just have to take the bet. Or one approach that I have seen to work relatively well in a new market is you hire two people to look at. Like you hire two different account executives or something like that. And so you kind of diversify your bets a little bit, and you have a better sense of, okay, if they both fail and they also both passed our interview process.
You remove the variance, right?
Yeah, then it's quite a bit likelier that it is actually a product or a market issue as opposed to a person issue.
Okay, that's quite cool.
That's just, I mean, that obviously doubles your expense as well, right?
Yeah.
So, and I don't think there's any one coherent framework because a lot of this is highly contextual. Sometimes you actually do need to make a bet the company move. Sometimes you are under enormous pressure from investors or expectations to get into a new market for the sake of the narrative. And I would never say that the narrative itself doesn't have any value. But sometimes your narrative can get in front of your business reality or your understanding of the market as well. It's quite difficult for it to match one-to-one. I think the ideal circumstance is for you to already go in with some degree of market insight, some degree of market familiarity, and some sort of distribution exposure already before you go in. Now, that's not always possible. And to your, I think, probably the broader question as well, given how diverse and fragmented the Southeast Asia and the APAC market is, if you're familiar with Singapore, it doesn't mean you're familiar with Malaysia. It doesn't mean you're familiar with Indonesia. I actually just got a call from someone who's looking for commercial leadership who is well connected across SMBs across all of Southeast Asia. And I was like, yo, this individual does not exist in the world. I don't know how it's even possible to be well connected across SMBs, which is a scale business. So you should rethink your brief. So, my 2 cents.
Nice. I like that. So maybe give us a little bit more on the iterative process of the product, right? So like assuming we get the best people in, right? So that's the first element.
Yeah.
Then we're in the market. So how do we kind of go about iterating this product? How much time do we give the original product to sit around and all that?
Yeah, I mean, it's a really good question. I think it will depend on the industry as well. I would say that the framework that I always go back to is similar to the value proposition framework that other firms like Strategizer or other consultants have used. For me, it always comes back to the customer. We have to have a clear view on who we actually are trying to serve, and our initial hypothesis quite likely is incorrect. And the segmentation you're using in a new market quite likely needs to differ from the one that you're using in your existing market. But once you have a view of how the market splits and how it kind of breaks down, then you can get a view of what their job to be done is, or what they're actually trying to do, what they're trying to accomplish, what they're using to accomplish that job to be done, the various pain points that they have, the frictions that they experience using the current product. I think you have a better idea of whether or not you can actually create a wedge that will be effective in breaking that individual segment. And I would say, just to maybe get sidetracked slightly, based on startups that I've seen as an advisor, as an operator, oftentimes the biggest challenge that startups have when they're trying to break into a new market or a new market segment is that they incorrectly assume that the behavior of that segment will be analogous to segments that they already serve, when in fact they might be very, very different. But if you go back to first principles and you go back to the fundamental understanding of the market and of the customer, and you start with almost psychologically with a blank slate and kind of force yourself to rethink what the value proposition needs to be, hopefully it is the case that your existing product is 60, 80, 90% of the way there, and you need to make that tweak to the remaining 20 or 10%, whatever it is. But there are situations where you will, having done this exercise, come to the conclusion that we are not going to be able to serve this new market well unless we make substantial changes. And that becomes a very different conversation internally as to whether you actually want to bet on this market, because the difference in needs is so huge. You can't just invest in a go-to-market motion or to tap the market. You actually have to rethink almost your business as well. I think one element that a lot of companies miss as well, particularly at the early stages, is that of monetization. In fintech, this is definitely true because you have different rules established by different governments and authorities on how and how much you can monetize. But that's also the case, frankly, in SaaS and services as well. The willingness to pay is going to be different. The way they want to be billed is different. And so the monetization component definitely needs to be a significant chunk of your initial analysis as well.
Nice. Question? No? Okay. So then if let's say we're going in to iterate this thing, right? Essentially, that's what you've kind of established, right? Are there certain best practices in terms of like trying to be efficient with this iteration process? Because the longer I'm staying here in the new market, the more I'm throwing money at it, right?
Yeah.
So how do I kind of, what have you tried that works, quick and get it down and dirty, and then if it does not work, then okay, we pack up, right?
I would honestly say that this is more of an art than a science, and also highly depends on your cash flow situation as a business overall. Obviously, if you're doing well in your core market, then you can expand to new horizons. You can afford to do so much more easily as well, right? If you're much more constrained and what you have isn't working, you have much harder decisions to make. I would say, and just to kind of reiterate on what we talked about before, one thing that has worked for us is to use existing staff to test new markets as well. And particularly when Aspire was ramping up with the spend management product a couple of years ago, we were able to use our frontline teams to go out and basically just talk to people very rapidly and assess whether or not there was opportunity in a given segment. And every quarter, we designated new segments as whether or not we were exploring it, whether or not we were what we called mining it or refining it. In other words, trying to tap the existing market and actually go for distribution, or whether we were refining the product and the positioning in order to tap the segment a bit better. And I think for us, being very, very explicit about what we were doing each quarter on the front lines was very helpful. I think what we have seen is that relying on the frontline teams, particularly frontline commercial teams, does have its constraints as well. At the end of the day, if you're using quoted salespeople to try to identify new opportunities, they're only going to go so far as whenever they identify an actual pot of gold for them to go after. If they cannot do that within a short period of time, they start to get demoralized. They're not hitting quota. They're not getting their comms. And so you kind of need to figure out the longer term vision. So in the Aspire context, that responsibility started to fall more on the combination of the general managers and the country managers, as well as the product team and other support functions working in concert together. And I think that approach with people who are able to take more of a long-term incentive view or more of a long-term perspective has been helpful in revealing more opportunities.
Fair. Maybe give us a little bit of specifics when it comes to Indonesia, like based on your experiences, what you guys have tried.
Yeah, so I think for Indonesia, I would defer to my colleague Ferdy. It was, I think, over there somewhere. You can call him out here.
Okay, call.
But Indonesia, I think for us, has turned out to be a very different opportunity relative to Singapore, right? The products that have really done well in Singapore are not necessarily the ones that have done really well in Indonesia for various reasons. It's just a very different economy, has a very different structure. Coming from a fintech organization, for instance, just the way you set up your financial process for companies here in Singapore, which is very much more SMB dominated, versus in Indonesia, where there is actually a relatively higher absolute number of large domestically focused companies, means that you have to serve quite differently. And without getting the specifics of our business strategy, what I will say is that what we're emphasizing...
Company secrets, huh?
Company secrets. I mean... You spend enough time in the industry, you'll figure out what we're doing. Yeah. But I won't get it on this podcast. Yeah. But what I will say is the bets we're placing in Indo are very, very different than the bets that we're placing in Singapore.
Okay. Are there certain markets in the region that is like very misunderstood? I know it's a very sweeping thing, but every business leader will think like, okay, I'm gonna go here, right? And I think it's gonna be like that. But expectation versus reality.
I mean, I would say from the Southeast Asia standpoint, literally every market is misunderstood. It depends what your frame of reference is, right? But I think my own perspective is that the typical narrative in Southeast Asia has been, and tell me if you disagree, is you start in Singapore as your hub. That's where you set up your headquarters. You get your funding there. That's where all the VCs are. And they will fund you because, you can run into them at the coffee shop or whatever, and you can develop a relationship. And then, of course, to drive your valuation, you go into a bigger market, and that's probably Indonesia. That's the one that people are most familiar with. It seems like it's next door. Whether or not it actually is a different issue. It's got 300 million people or whatever it is. Big market, growing quickly, really strong macro narrative, right? Sometimes people take that same perspective and apply it to other large markets in Southeast Asia. They start looking at the Philippines, which also is growing at a decent clip, has a pretty substantial population, and perhaps Vietnam as well. I think what people underappreciate about the region, especially if they're coming from outside of it, is how fragmented the overall regional market is. You're having to adapt to new languages, new cultures, new regulations, new processes every time you're going to a new market. Even within Indonesia, as my colleagues would say, it's not one market, it's an archipelago, and is actually consists of hundreds of languages and therefore hundreds of sub-markets as well, right? And so I would say that's one key point that a lot of people coming from outside the region underappreciate. My own personal biased view as well is people underappreciate the trading or the export opportunity of some of the markets here. I think this is becoming a bit more apparent given the changes in the geopolitical situation with manufacturing and other things shifting somewhat out of China as well. But I actually call it Vietnam specifically. not just because it's becoming an export powerhouse for physical goods as well, but because we actually see firsthand a lot of participation by Vietnamese entrepreneurs in the digital economy as well. The digital economy increasingly goes global. It used to be that we saw Japanese gaming companies and eventually Korean gaming companies, media companies going global. I think all of us have seen K-dramas on Netflix, for instance. I think we increasingly see Vietnamese companies going into global markets as well, including for digital goods as well as e-commerce. And so personally, net bullish on Vietnam. I think it's a relatively difficult market for non-Vietnamese to tap, which is why I'm not there personally right now. But overall, I think it is somewhat misunderstood and somewhat underappreciated.
Fair. So maybe from a market research angle, right? Since we're trying to get best practices, we're trying to get all the information before we go in and decide what do we want to do. Of course, it's not like a waterfall. You kind of trickle in, you figure out, you get dirty, right? But before that, like what are some sources that you kind of rely on, or some things that you think people should read or understand to get the overall market research?
Are you asking the management consultant in me, or are you asking the startup operator?
Come out, yeah. I mean, you got to reconcile both, right? Essentially, right?
And it's a constant struggle in trying to figure it out.
Yes.
So I would say the most valuable information is always customers on the ground, especially if you're able to do deep interviews with them and really understand where they're coming from, what they're hoping for, what their hopes and dreams are, where they're feeling their pain with their current solutions, and so on, right? It's almost a cliche in the startup world. It's the linchpin or the cornerstone of the lean startup methodology. You go and talk to your customers. It's almost obvious to say that, but I think it's worth reiterating that if you don't talk to your customers, you don't actually ever know anything. Because the reports or even what you're getting filtered through experts and whatnot is going to be relatively high level. It's always going to have some sort of bias or lens on top of it, and it may not be up to date. And so talking to customers, for me, always is a key foundation. Now, with all of that said, I think it is important to know what you cannot get from customers as well. What you're not going to get from customers is an understanding of the overall market size or the market opportunity. For customers, they care about a market of one. It's themselves.
Yeah.
And so if you're trying to get an aggregate view of the market, you end up having to talk to hundreds of customers or thousands of customers and trying to kind of do a bottoms-up or grassroots analysis. That can get very time-consuming and can get very confusing depending on how robust you can be in the methodology there. And so there is still value in doing much more macro research from like government statistical databases, from Crunchbase, PitchBook, news sources like Tech in Asia, E27, whatever it is, that give you kind of the more macro picture and help you understand, okay, I've seen this opportunity, I've spoken to customers, I've gotten the insight, there is pain here, I think we can solve it, but what do we actually get out of it if we are able to solve that pain? And it may be that you have a really great product and you've built it for like the 50 customers that you've met, and then there's only like 250 customers total, which might be okay in enterprise, but definitely is not okay in consumer SMB, right?
Yeah.
So with that lens as well, you do need these other data sources to give you a sense of what you're working with. And then depending on to what extent you're trying to reinvent the wheel or you're trying to do something truly breakthrough, I would say that people who have been in the industry and have genuine industry insight who understand what I would call the physics of the business can be quite valuable as well.
What does it mean, physics of the business?
Physics of the business, I would say how customers behave, how they tend to buy, and more importantly, what are kind of the rules around monetization and competition? So, for example, if you're Aspire and you're working in fintech, there are lots of people out there from banks and others who have decades of experience in corporate cards, in FX, in credit. And anytime I would say you're trying to disrupt a big market like that with very established rules, with very established competition, and where literally the amount you can charge is often set by other people, or the amount you can monetize is set by other people, you're going to be bumping up against the physics of what I would call the physics of the industry or the physics of the business very quickly. And so again, if you're new to that sort of thing, you're new to the industry, which I somewhat was when I was coming into Aspire and fintech, it's very, very helpful to talk to people who have done this before. And it's not just fintech as well, right? I mean, I'm sure Glenn feels this when you're recruiting. There's kind of a market rate that people expect, right? There's a certain way that people expect to be billed.
It's true.
Same with cybersecurity, same with online shopping, all of these different things.
Let's Talk See Business is brought to you by Glint's Talent Hub. We understand that building a thriving business is immensely challenging. It is especially intense for business leaders like yourself. Hence, we want to journey with you. Glint's Talent Hub is the leading all-in-one solution for all your talent needs. Our mission is to pair you with the right talent anywhere across Southeast Asia that fits the unique needs of your business. From there, we handle all your talent management needs. We're talking talent sourcing, hiring, EOR, PEO, talent development. We have a track record of 2x faster team building and up to 70% cost savings. If you want to expand in Southeast Asia, we are your partners. Connect with us, link in the description below.
So timing is obviously really important. Conviction is also really important for the business leader that's looking to enter in the market. And so curious, I guess, how you would help leaders think about the timing in terms of, where to begin.
If I knew, I would probably do something different, just to say. But I think the general paradigm that at least Silicon Valley or Silicon Valley investors have favored is when you are taking an underappreciated market, but you have the right timing for a change in behavior, a change in technology, a change in culture, a change in trend, whatever it is, that allows the market or the opportunity that you're targeting to grow much larger relatively quickly, right? So you're riding the wave of the market. And understanding when that timing is going to occur, I think is really the most challenging bit, right? And then even if that change occurs, the question is it going to sustain? Really what we're asking leaders to do, and I think what your question is positing, is can we get a view of the future in some way? I think that, in my experience, has come from a combination of a few things. One is some sort of deep industry or some deep market insight. And that can generally mostly come from experience, but can also occur if you've really done the work, the deep dive into the market through interviews, through research, and that sort of thing. And then from there, can you not only envision the future, what it could be and what it should be, and then do you have the wherewithal in terms of personal will, in terms of resources, in terms of capital eventually, to bring that future into existence? And not only does that future have to come into existence, you have to find a way to own a significant chunk of that future. A lot of people in the startup world, I think, get into it for mission-related reasons. They often have a chip on their shoulder. They have some sort of burning desire to fix a problem that they have perceived for themselves or that they have experienced for themselves. And so they don't necessarily like to talk about the money. But ultimately, if you are trying to build a large
you
business...
You got to talk about it.
You got to talk about it, right? So if you bring this future into existence, you've created a ton of social value, but you own like none of it, you haven't actually created a business. You've created a movement. Good for you.
Great.
You've had...
But it's not a business.
You made your dent in the universe. It's not a business, right? And so you do have to find some way to create, not necessarily monopolistic. That's a dirty word. Let's not use that publicly. Okay, we're not monopolies, right? None of us are monopolies here. But you do have to have some kind of moat, which is essentially a proxy for some degree of monopoly power, at least for a segment, right?
And for a period of time, right?
It has to be defensible. You have to be able to keep out competition. Otherwise, that competition will drive your ability to monetize basically close to zero, which is kind of what we see in ride sharing, in e-commerce today. Not to denigrate anyone.
No,
but
he just did. He just did.
Sorry. my apologies to anyone who's offended out there. But I think we would all recognize that it's really, really hard to have competitive mode for things like that at this point, and which is why margins are being driven so low.
Yeah, fair. So I want to ask, like, in the next phase of kind of like your go-to-market, right? So you've kind of tested out, you got it there, you got all the matrices, okay, this looks like there's something here, right? So how do you then scope the next phase? I'm going to invest more, I'm going to do more things, right? So you already proved something, right? So how would you scope the next phase?
I mean, again, really, really challenging to credit anyone out there who's working on this sort of thing. The reality is, even if you scope that opportunity and you validate it to a certain extent, there's always going to be a degree of uncertainty, right? There's always, in theory, more research that you can do. I would say that decision needs to be driven by a few different factors. One is definitely competition. What are the alternatives out there doing? What are your peers doing? What are the others looking at? Sometimes you have to make the bet just because others are already doing it, and if you don't, you kind of lose the opportunity. Another factor to consider is what are the other options you're considering internally as well.
Opportunity.
Especially once you get to Series B, you get to Series C, Series D, and, there's going to be dozens of ideas within the organization for growth. And they're going to compete with one another, right?
Yeah.
And to what extent you can invest them will depend, maybe not on a strict like IRR calculation or something like that, because I think that's actually really difficult to do. So maybe it's a sanity check in the startup world. You can make the numbers look good, like no matter what you're doing. But I think you should basically weigh each option against the others in terms of feasibility as well as what you think you're going to get out of it. And ultimately, what it does come down to, in my view, is that teams, companies, organizations, leaders have to be very, very clear on what you actually are trying to do. What does success look like? How are you going to measure success? And the classic formulation would be, based on that definition of success or your vision, where will you actually play and how will you win? If you're not able to answer whether or not an initiative is consistent with where you want to play, and definitely if it does not answer the question, how are you going to win in your chosen opportunity, you probably shouldn't be doing it, or you need to rethink it.
Do you have a system to grow the team? All right, so you send two people out into a new market. You establish that there's a new market. Who do you hire next? Like, what do you do? Like, do you have something there for us?
I mean, it depends on the size of the market and what you're doing, right? So for me, if I'm talking within my purview in Singapore and I identify a new segment, for instance, that we can serve with an existing product, then yeah, great. It's going to depend on how big that segment is, though. Yeah. So let's say I identify a new opportunity, and I think that if I just keep one AE on it for a couple of quarters, I'm going to tap it out. I'm probably not going to invest hugely in that segment. Conversely, we do find an opportunity where we can move relatively quickly to get more market penetration, and that opportunity is substantial, then I probably will double down much more in terms of headcount and repeatability. Ultimately, I think that repeatability angle is critical. If I have a motion, if I have an opportunity, that's fantastic. But adding more people to it is not actually going to help it scale because it can't replicate what our initial success has been. There's no real point in adding more headcount or adding more resources to it because I'm not going to get anything out of it, right? And then I think you can kind of extrapolate that further to countries as a whole or markets as a whole, which is often the case in Southeast Asia and in APAC more broadly. Once you've validated the initial opportunity, maybe you've started small, maybe you've won your initial deals, you've kind of landed. Now what do you actually need to execute the strategy? Are you trying to go full-blown into the market, or are you just trying to continue to expand on the edges of that beachhead? Again, I think it comes back to the question of what does success actually look like given this initiative, and you just sort of resource accordingly.
Fair.
And how do you think about partnerships in the context of all of this as an accelerant, and the when to look for partnerships and that type of thing?
Yeah, I think it's a really interesting question. I would break it down a different type of.
You don't look very interested. I think it's a very interesting question.
Sorry, it's an interesting question. I would break it down into different types of partnerships, and it really depends on what you need to do to accelerate your roadmap in both go-to-market as well as product. So on the product side, depending on what you're doing, the partnerships may actually be essential. Again, just coming from the Aspire lens, if a key part of our value proposition is integrations with, say, accounting firms or accounting software, then if we don't actually have a product partnership with local accounting software, then we're kind of dead in the water. We don't even have a basic requirement to enter the market. And so that's something that we absolutely have to do, right? Once I think you've passed those initial requirements, you can look at both distribution and things to create a more differentiated advantage in a way. So on the product partnership side, I would say to the extent it can accelerate your roadmap, then you kind of go into the build versus buy versus partner debate. And that will depend on the timetable on which you're operating. Sometimes if the partnership is executed correctly or executed really well, you can really increase the capabilities of your product or the overall solution you can bring to market and therefore help you move faster. In some cases, it might just be easier to build it yourself, depending on the level of resourcing you have and the compatibility you have with other partners. In terms of go-to-market, I would say it does come back to somewhat to the degree of product market fit that you have. I actually occasionally do a talk which is titled 3 Ways to Fail or 3 Ways to Not Succeed in Southeast Asia. And one huge personal pet peeve of mine is when companies from outside the region try to break into the market using distributors. And this is not to crap on any distributors out there. Again, you provide a very magnificent and beautiful service. But the reality is that for most startups, if you try to go only through a distributor, the odds are that you will fail. And this is because distributors are set up mostly to be order takers. If their existing set of customers want something and they know they have a need for something, they will go to the distributor and ask for it. From the distributor standpoint, the effort that is required in order to bring an innovative product to market from outside the region with relatively little service guarantee, the incentives just aren't really there. And the capability and know-how may not be there either, right? And so if you're a startup and you're really trying to bring something that's differentiated and new to the region, fantastic. Do it yourself first. You should really figure out who the customers are, what your positioning needs to be, get your initial traction, get those case studies, and then work with a distribution partner. That's the kind of what I would call the hard version of distribution partnerships, where they actually are a reseller and they're kind of doing it for you. This is the light version where you, through a partnership, you can get a lot more exposure. You can enhance your brand through association, and you get kind of a soft human side where they're a partner, and therefore they're going to divulge some of their secrets and insights to you as well, which can be helpful in a different way. So I would much more recommend startups do the latter than the former when they're entering a new market.
Fair. Closing, last question. Okay, so you shared a lot of good stuff, right? I just want to contextualize for our audience.
I'm glad.
Yeah, that's good.
Hopefully
good.
It's been helpful.
It is. We just want to contextualize because a lot of what you said, it's very startup-ish, fast growth tech companies, right?
Yep.
Do these ideas apply to like small, medium businesses that are trying to expand within the region?
I mean, first of all, I would say if you're a small and medium enterprise and you're trying to expand within a region, you inherently are being very entrepreneurial and you're stepping into the unknown just as much as if you were a tech startup or a fast-growing company, right? And if you're aiming for growth, it doesn't mean that the same rules or same principles don't apply to you. It just means you have less funding and you can't burn as much money.
You got hit.
You just kind of have to be more careful about it, right? And to that extent, I've actually seen a lot of business owners in traditional industries or who do not have venture backing actually become savvier about expansion or about growth because they're forced to be more disciplined. I mean, if you've raised like $50 million and you have some, a couple $1 million to burn, you're going to burn it. Like, it's literally your job to burn it, right? And the pace at which you're moving means you probably don't have access or the time to really build that initial base of connections or of knowledge, of insights, whatever it is. If you're a traditional SMB, you've probably been in the industry much longer. Your people have been in the industry much longer. You've been to the industry shows, you've been to the road shows, trade shows, whatever shows, and you know people, right? And so actually I would say you're probably actually the odds are good that you're following some of the principles I've outlined better than the average startup.
Nice. I think a lot of people find comfort in that, right? So,
I mean, if you're not, then you should listen too. But I actually think I have my own sort of meta thesis, which is a topic for a different podcast. That startups kind of forgot a lot of basic business principles and are now having to relearn them given the more difficult financing environment. Whereas the SMBs never forgot them.
Yeah. Nice. Thank you for your time. Lovely. Yep. Right. Maybe we can open up the floor. Do we have some time for Q&A? Right. Yes. Questions.
Asking really big questions here.
It's a select crowd, bro.
Yeah.
Right. Yeah.
So, with the caveat that I am not a trade lawyer by any stretch of the imagination, although I actually, before I did business, I actually was an intern in the U.S. government dealing with trade issues, so I do have opinions on this.
You tried it.
I tried. I tried it and I did not like it, but nevertheless, I have opinions. What I would say is that what political theory would predict at this point about the world is that you would see an increase in protectionism. for a few reasons. One is that the gains from trade have not been equally distributed, and you also have a corresponding slowdown in a lot of the major economies. So particularly if you are a country that's relatively concerned about domestic egalitarianism, especially if you are characterized by what would be called economic dualism, where you have, in the case of Indonesia, for instance, some cities are superstar cities like Jakarta that are growing really quickly, but you also have really huge hinterlands or rural economies where the per capita GDP is maybe like 1/10 of what it is in Jakarta. You're going to be very, very concerned about democratic or your own political stability. And so as a policymaker, it's actually entirely rational to try to put in place protectionist, what could be labeled protectionist measures in order to protect the stability of your country. You see similar dynamics play out in China. You see similar dynamics play out in the United States. Japan is kind of being weird and moving in the opposite direction, which is what Japan kind
They've been weird for a while. I don't know
what Japan always does. They go in the other direction, which is actually probably the right move in this case. But my guess is that in Southeast Asia and in APAC broadly, we will see increasing competition among countries for different economic activities, especially as U.S.-China tensions lead to more offshoring from China. And so everyone's kind of trying to get a piece of that pie. Everyone's, especially in Southeast Asia, everyone's trying to get a little bit of everything as well. And so protectionist policy making is likely to be a reality. As to whether I'm worried about it, it depends which hat I put on. As someone whose worldview is actually more towards integration and more overall liberalization, as an individual, I would say I'm concerned we're moving the wrong direction. Now, as someone working at a fintech, how do I put this in a way that doesn't seem totally mercenary? The increasing distribution of economic activity across different countries means that there is more opportunity to gain for fintechs from FX as well, because you're dealing with more currencies and you have more needs for more complex payments. And so this is also to say, actually, in the overall business landscape, especially in the Southeast Asia context, I think that trade tensions and protectionism will actually lead to more opportunity overall, especially for smaller, nimble players who can take advantage of different things.
Nice. Thank you. Another question?
Personal opinion, not Aspire's stance.
Not Aspire's
not Aspire's position on this. Okay.
Another question? Yeah, gentleman in the back.
I think the question highlights essentially a different evaluation of opportunities in the region. So I'm an American. I came from the States. If you look at tech companies in the States in particular, they have the world's largest domestic market with one currency, with one language, with this, generally speaking, one-ish set of regulations, right? And so anytime they're thinking about investing in a foreign market, they have to have a really, really strong case for doing so. Because if you do an apples-to-apples comparison, the domestic opportunity is almost always going to look more compelling than an international one. And so from the perspective of a U.S. company, and you're evaluating, say, Indonesia, and you're like, okay, I go into Indonesia, and I have a strong thesis that I'm going to tackle the mid-market companies in Indonesia for my project management software. How many targets are there in Indonesia? I would guess, let's say, depending on the software, maybe 1,000, 2,000 companies, right? From the vantage point of a Singapore company, that looks fantastic because there's literally like maybe 1,000 mid-market companies in Singapore. If we go into Indonesia, we're doubling our TAM, our addressable market, right? If you're an American company and you have literally like 1 million or maybe 100,000 companies in that segment already, who, by the way, have higher willingness to pay and are going to be easier to service, you don't have to deal with time zones, you don't have to translate into Bahasa, and you're increasing your TAM by like 1%, it's not going to look rational if you put a full team into Indo. It's going to make sense for you to put like maybe a 3-person sales team to address that opportunity, right? And so it's always going to come down to opportunity cost. From the perspective of a regional company, you're kind of forced to look at regional opportunities and to invest more heavily into them because your own domestic opportunities is so much relatively smaller. And by the way, that dynamic actually plays out in Europe as well, right? You do see European companies in fintech and otherwise often being more interested in Asian markets or the Australian market relative to Americans because the American market is just so big. For China, it's a little bit different because they have their own domestic challenges I think are spurring some of them to come out. But I would actually guess that once the Chinese economy recovers, you're going to get a pullback and more interest in the domestic market again. Japan, again, kind of its own animal, so won't get into that.
Yeah. One day I'll introduce you to the ambassador.
So I bring up Japan mostly because I'm relatively familiar with it. I have sold into Japan
I get it.
and my brother lives there, and he has strong opinions as well.
I get it. Nice. Any last questions? No, last questions. One last question.
Sorry, was the question on AI or? Yeah, okay. Everyone wants to know the answer to this question. Okay, so first of all, I think AI has transformative potential. Every night, my children individually demand that I go to Bing Image Creator and create custom Pokemon for them.
Oh, that's so cute.
It's cute, and it also means that I need to allocate roughly 30 minutes of my time to curating customized Pokemon.
How did they even know it in the first place?
Because
you started it.
I started it.
Yeah.
Yes. You know, it was nice, and I was like, let's do Pokemon.
That's fun for a while.
It's fun for a while, right? And then I was like, okay, this is a habit now. They're addicted. So I point this out as a very light example of AI really creating capabilities that were not possible at all before. Right? There's zero chance I would have been able to create customized Pokemon for my children at scale without this technology. It just would not occur. I don't have the artistic talent at all. And I think it is going to impact a lot of different industries in that way because you're bringing capabilities at scale that are really, really easy to use for certain types of activities that just were not available. In the fintech world, I think you're going to get a little bit of a dichotomy. On the one hand, you have literally the money movement type technology, like in terms of payments, you're holding currency, maybe you're extending credit, you're moving money from point A to point B. And I think AI, frankly, will not have that much to do with the fundamentals of this piece. One, because it's highly regulated, and two, you're still quite reliant on existing networks and nodes, whether it's banks or networks like Visa, Swift, and so on. And so I don't think that's likely to change. The more disruptive technology is actually likely to be blockchain rather than AI for that part of fintech. But then there's a part of what people also call fintech, which I would refer to more as like financial operations or financial analysis, where if I was a junior accountant or a junior financial analyst, I would be very, very concerned because generative AI, and I would just say AI in general, is going to be much better at that job than you. Currently, if I'm trying to figure out, okay, what's my cut of companies that fit a certain profile, what's the revenue opportunity that I've gotten from them so far, I need to go ask a junior analyst in some way to do that, right? But an AI is going to be much more effective than that, especially if you deal with large data sets. And I think that piece is going to be heavily disrupted in the practice of finance, and particularly strategic finance or business intelligence. And so for the financial industry overall, the stuff that's associated with that, and that's actually one reason I'm glad I'm not in management consulting anymore. It's going to be a really bad time to be a junior analyst. I think AI is going to have a humongous impact.
Nice. Thank you. And thank you for your question.
Yeah, well, thank you for joining for this episode of Let's Talk Z Business. Really appreciate it. Of course, when it comes to expansion, none of us have a crystal ball in terms of these topics, but I think the discussion today really, is a lot of food for thought in terms of what to keep in mind when you're thinking about that for your organization. So really appreciate you joining us today.
Absolutely. It was my pleasure.